Hello guys, what is happening, and welcome to tonight's live stream. So I have changed a bunch of things around in the office. I moved things around. I don't know why, but I was like shoved up against that wall. Really, there's a lot of space in here, so I'm nearer to the window now, so more natural light. And plus, I've put the palm behind us so we can remind ourselves that we're in paradise here. Far from it. Anyway, guys, today we are going to be going through one pattern that is occurring right now that actually occurred in 2008 as well in the US, and I'm going to show you an example of that pattern occurring across both markets. We're also going to take a look at some of these declines that are happening across Canada, because some places are crashing down to earth, the prices. So we're going to take a look at that. So before we get started, please do your part and hit that like button. Just do your duty. I've also changed some things on the microphone, so hopefully it sounds a little better. I actually tested it with some headphones and it sounded good, but I never know how it's going to come across through this software. Trader586, I'm glad you're in the house, buddy, because stick around, because remember fuel cell energy, we're going to bring up that chart when that pattern comes back. So anyway, I'm going to share my screen. We're going to head over to Twitter. This tweet comes from, I think it's this woman. I think she's a real estate agent. I don't know, to be honest. But anyway, she put this out. So let's take a look. Some of these declines are just really substantial. So all these places are the outlying suburbs of the GTA. So places like Whitby, that's a long ways commute away from the GTA. But still, people were piling into these markets throughout 2020, 2021, when thinking, remote work is going to be forever and we're never going to go back to the office. And now we, of course, know that that's really not the case, is it, guys? Like, a lot of people are heading back to the office, which was, I think was going to happen for a lot of people. So anyway, Pickering, the prices in February have changed between February and May of this year. $354,000. I mean, that is just insane when you think about that. It's the value of what a house maybe should cost, or less than that, to be honest, in Canada, the average price. But just that changing that much in that short a period of time, 3 months, is an insane amount of change. But Whitby is the biggest change. $417,000, the prices have dropped. But here's the thing. Like, all these changes, they sound mind-boggling and drastic, and everybody's like, wow, is it time to buy the dip yet? But the thing is, and Scott Walters is going to be on the channel at some point, maybe next week or the week after, we'll see how things go. But he's going to talk about his experience of trying to catch a falling knife. And I think he's got so much good information. We were chatting on the phone on Friday, and I was like, dude, we have to get this out on a video, what you just told me. I mean, it's good to always speak to other YouTubers. I speak to a lot of other YouTubers like Revert to Means as well. And we kind of, go through these different things. Like we often are talking about the very things that we come here to YouTube and report on. And the thing is, there's just a lot of stories within that. But anyway, I'm getting a little bit off topic there. But even looking at the price in Whitby, like May 2022 right now, still 1.1 million for a house there, single family detached. Like, I mean, that is ridiculous. Like, that is still grossly overvalued, like massively overvalued. But a lot of people are going to be staring at these prices coming down, and as soon as it goes into their budget, they're going to be in there, boom, into that market. But the problem is with doing something like that, and I'm going to be explaining this as well on a quicker video, is you can lose the home. And a lot of people don't really realize this, and this is more financial education for a lot of people. But if you buy a house, it's leveraged. Like if you're not buying that house cash, you're putting even 20% down in a volatile market like we're in right now. You could very well lose that house without defaulting or anything. So you can get a real estate margin call. And it's just insane. So another thing that I want to show you is another area of the suburban GTA that also has just seen absolutely monstrous declines in such a short period of time. And I think that's really the key thing here. So here it is. So let me bring this up on your screen so you can see it. So this is in Peel and Halton. So you basically can see the price change from the peak there. Brampton is down 16%, Mississauga nearly 13%. This is in 3 months. This is an extreme change in price in 3 months. That is a very extreme. You've got Oakville down nearly 20%. Like, these house prices are still extremely monstrously overvalued, but they are coming down at an alarming rate, a very, very alarming rate. Like, if you think about that, 18% for Oakville, like that's insane. That's like 6% per month plus inflation. Think about that. Declining that much per month. Compound that over a year. You are talking serious declines. And the math as well with declines is obviously you need more of an upswing to get you back to where you were than is a decline. For example, like 20% decline, you're going to need more than a 20% price increase to get back up to the same place you were before the 20% decline, if that makes sense. The math of that is all online. It's very simple. But, it's just insane when you take a look at these prices like Burlington. That's a big, big booming place. And one thing that I want to really highlight is when we had this sort of correction that happened in 2017 in the real estate market, it did not really occur in the suburbs. In fact, it was really just Toronto, Vancouver that were taking the main hit from that, and some other centers that came after, like Calgary. So the thing is, the fact that these suburban markets are in such decline is big, big stories, because this is where your typical mom and pop home buyer and landlords are buying. So it's very, very interesting to me. And I just think these prices, they're coming down extremely fast. I mean, Oakville, that is crashing down. 19% in 3 months for real estate is extreme. And we are just in the beginnings of this, because when you really think about it, and I've been saying this for a long time, we're still in a market which is artificial. Why? Because there are still a lot of people who've got rate holds for very low interest rate mortgages, teaser rates essentially now, when you look at how fast mortgage rates have gone up. So the market is still artificially propped up, and you are seeing declines like this. What's it going to be like in the fall? What's it going to be like in the winter? What's it going to be like next spring? If rates continue to stay high and mortgage rates are like this next spring, then I'll tell you what's going to happen. The sales are going to disappear over the winter and they're never going to come back. But here's the thing, all the sellers, they're still going to be there. They're still going to be waiting, and they're going to pile all their houses onto the market in spring. A lot of them because they're simply running out of time. They're running out of money and they can't afford the asset anymore. And they're going to pile it onto the market, and it's going to be front loaded. So you're going to see, I guarantee, fear and panic start to hit in the spring of next year or early as February, March, because people will try and get ahead of spring. Oh, we want to be the first to sell, so let's list it in February. Let's get it up. Just like people were doing with buying, the reverse is going to happen of this. So I think it's incredibly interesting. Now, let's go on to this pattern that I think it's incredibly bearish again, we're just at the beginning of this, and we have limited data here in Canada of when it comes to charts and everything like that. I make a lot of charts myself, but you know, we compared to the United States, we just have such a terrible real estate data system here in Canada. It's very hard to get data and charts, and not many places actually give you good stuff. It's very hard to find long price charts. It took me forever to find one for Calgary, for example. So I'm going to bring up this chart. So how on earth do I find out which one is which here? What is this? I don't know which one this is. Oh, here we go. It shows me a preview. Perfect. Okay. All right. So let's take a look at this. I want to specifically show this. So I'm going to bring this up on the big screen. So basically what you can see here is a double top in the real estate market that occurs. Now, sometimes these patterns happen because of a ceiling, like the price can't get any higher than that anymore. But the thing is, this is like essentially this double top pattern is recognizable anywhere, and you can see it happened on the price index as well, albeit not as extreme. But you can see that double top, and it's incredibly bearish pattern. And once you generally pass the low of the correction in between the double top, that is when the double top has been breached. So if we take a look at what's happening now in Canada, and this chart is unfortunately a HPI chart. I don't necessarily like these charts, but we have to do the best with what we have here in Canada, which is not very good. But anyway, I want to show you this. So take a look at this. Doesn't this look similar? So you got a double top with a higher high. So that is interesting. Now, this lags very, very far behind. Even Hilliard explained this on the live stream on Friday. So it's going to take a while for this to actually show the declines that we're experiencing right now. But it's going to be very interesting to see what this looks like moving forward. I mean, this only goes as far as January 2022. So it's very, very interesting. And I think that is something that, I mean, we're seeing the same charts and the same thing appear, and that is not a good thing. It's not a good sign. And these can be the psychological tops of markets. They can be the actual tops of markets, the limit of affordability, even with the extreme amount of credit that is available in a country like Canada. So I think it's interesting, and you know, these things, these charts, they play out, and people say, oh, you can't really look at those charts and say real estate is the same. Real estate is different. How many times do we hear people say things are different? But the reality is, the way I see price charts for stocks, for real estate, is a chart of emotions. And that's really what was a game changer for me when it came to my own trading, was seeing the emotion of the market instead of looking at the technical analysis and everything like that. Really, I just trade fundamentals and patterns. And at best, I don't even trade fundamentals. I just trade the patterns. The patterns just occur based on when the fundamentals happen. Like if I just trade the patterns on their own, I don't need to know about all the news that is happening. It helps because you know when volatility is higher, but really these patterns occur anyway. And it was thinking like that that really switched me. And you see these same patterns occurring in the real estate market, like we're seeing on this chart here. And it's not just the real estate market. And we've got Trader 586 who is in here right now. And he knows about this stock. But this is fuel cell. Now, albeit it's a little more volatile and this is a weekly chart, but this is back in the dot-com bubble. So this is a dot-com stock in the dot-com bubble. And you can see there that it went up, came back down, and then went up again. You got that double top. This one was a lower lower high, double top, but it's the same sort of pattern. And the interesting thing is I put the trend on there just to show you guys that it's still corrected below the trend. And not only that, you follow this thing and it eventually bleeds out and it's worth just nothing in the end. It trades around $3.46 right now, and it was up at like what, $7,800 this stock. So this stock never recovered after the dot-com bubble. And a lot of people are going to see the same thing happen with stocks this time around. Like, this is so similar to the dot-com bubble, especially like the hype in the market, everybody trading crypto, trading stocks, whatever it is. You know, what really opened my eyes was, I can't remember what I was selling, but some guy came over to my house, and he was our house, and he was asking us, well, he was asking me, he was saying, what do you do for a living? And I was like, you know, I do this and that. And basically he was like, oh yeah, so I actually do a little bit of trading myself, and I was thinking, and this was in 2020, I think it was. I can't remember why he was here. He must have been buying something, but I can't remember what I was selling. But all I remember is that guy talking about SPACs. He was going on and on and on about SPACs, and I said to him, I said, they're incredibly risky. Like, SPACs are incredibly risky, and this was during the SPAC boom, which turned into like the everything boom, essentially. And, you know, where are all the SPACs right now? They've just been killed and run over, and this guy was just essentially buying all the new SPACs and just juggling his money around like that. And that really opened my eyes, and I was thinking, wow, like, because we didn't see many people during 2020. Obviously, a lot of people didn't see many people during 2020. And to have that guy, like, in the office saying about stocks and SPACs, and of course, it's the highest risk stuff that he's talking about, that was really an eye-opener for me. And, you know, the dot-com bubble, it really is like popping. Some of these stocks are down 92%. They're never going to see the light of day again. Like, a lot of people are just going to hold forever. They're going to be forever holding the bag. You know, some of these stocks will recover, but really it's a big gamble to knowing which one is which. A lot of these tech companies are going to go bankrupt because the cost of debt has risen so much, and these tech companies are so debt heavy. So we're at a point now with real estate where it's getting interesting, put it that way. Nothing is cheap right now. I wouldn't say anything is cheap by any stretch of the imagination, but it is getting very interesting to watch what's going on. And I think it's going to be incredibly telling what happens over the next sort of 10 months, something like that, because you're going to have the real estate market die off in the fall. It's seasonal. It always does. So people will say, oh, we'll try again next spring. A lot of people will say that, I guarantee it, because they're not getting the price that they want this year. They'll just say, Jane, we'll just do the house. We'll put it on in March, in spring again. And that's going to be a big mistake. I think we'll continually see the prices decline over the winter time. But the question is, like, when is the fear and the panic going to start, at what point? And the thing is, a lot of people by next spring are going to be at the point where they can no longer keep this house of cards going along. Like, they're essentially going underwater on everything. They need to sell the home. They're essentially a distress sale, because if they don't sell their home, then the bank is going to take their home because they can't afford it anymore. And we saw so many people just at the whim of their emotions in 2020 and 2021. And that was the real sort of thing that also stood out to me, was the fact that 2020, everybody was zipping around, moving around, this remote work. Everybody was saying about remote work. And I was just like, yeah, fair enough. Remote work, that makes sense. But however, like moving to an entirely different city, buying a house, like that's a big change up for people. Moving to different provinces in other people's cases, and that brings on more risk. Like if I'm a bank, let's say I'm lending somebody money for a mortgage, if that person, like let's say, has just moved to Calgary from Ontario, sorry, like to me they're a higher risk. They carry a higher risk because I'm going to be thinking, well, they're going to be pretty new in their jobs, or if they've got a remote job from Ontario, like let's say they are laid off, what are the chances they're going to get the same work? And you just have to think practically like that. But the banks don't think like that because they don't care. And that's what people don't understand. These banks are ruthless sharks and they do not care. They just want to lend because it's bigger bonuses, and everybody is a moral hazard throughout the situation, from the realtors, the mortgage brokers, all the way to the people underwriting the loans and the people who are meant to be checking the loan applications. They're all bonused to do volume instead of actually to do their job, which is to make sure these loan applications are good. And that is a huge problem. And, I was looking at GDP today here in Canada, and, a rough estimate, 30% of GDP in Canada is real estate. And that is a rough estimate, but it's probably about the ballpark. And that is insane. That's literally like 1 in 3 jobs dependent on real estate. And think about how they're at risk. The risk of them losing their job, the probabilities is increasing month by month as real estate continues to cool, continues to go down. More and more construction workers are going to go out of business. More mortgage brokers are going to go out of business. Lots of people, realtors, work's going to dry up. The roaring 2021s or 2020s are over, and it didn't really take long. And, these things are going to stick in people's mind for a long time, what happened here. And I think it's incredible that the bubble got as big as it did in Canada. And, I'm not surprised to see these massive price declines, because I think, like, obviously insanely overvalued real estate. And, it's built, like, I've actually spoke to a couple of people on this channel who work in construction, and they tell me how they build these things like absolute garbage, like just shacks. They build them like shacks. There's all kind of issues, and because they're all rush, get it completed. There's no attention to detail. If something goes wrong, they just, put the floor down. Like if there's a leak in the bathroom and it's gone all over, then they don't dry it out properly because it's all rush. Just put the carpets down, everything. Like, they don't care. And people are paying like ridiculous amounts of money to buy these things, which just, I mean, it blows my mind. But the thing is, what I've come to realize is all this wealth in Canada is paper wealth. And kudos to the people who actually use their initiative and they think, wow, like I've got all this equity in my home right now. How can I lock that in? Turn that paper into actual wealth. And, a fair few people have done this, and there's no way that even 20% of people can do this, because it can only be the people at the top. It's like a Ponzi scheme. The top investors, they're the ones that get out like a bandit. But essentially, that can be anybody with the right psychology. I mean, right now is still a good time to sell your home. It's going to be a much better time than later this year, but the clock is ticking for people, and they don't realize that because they've been numbed by the past 20 years. And even though they're looking at headlines and seeing, oh, they're talking about inflation. We haven't had that since the 1990s. Put 2 and 2 together. The situation has changed completely. We are not in the situation that we were in during 2008, where they can just artificially inflate another bubble off the top of it. It's at the absolute extreme. Unless they went to deeply negative rates, which would bankrupt all the banks and destroy the currency and cause hyperinflation, which I don't think they're going to do. I mean, just look at what's happening to the euro, and that's really not extreme negative rates, but you can see how the euro is getting crushed against a lot of other currencies, because the fact is the ECB just fails to move on any sort of policy. And the euro is like the biggest failure of a currency ever. I mean, but there's other currencies that are getting squashed as well, like the Bank of England not doing enough to fight inflation. You know, these central bankers are being pinned by investors against the wall, and they're essentially being held ransom. They must put up this fight, at least seem like they're fighting inflation. Otherwise, people are going to think, why am I holding this paper when I can go to other countries and I can hold paper, get a real return? So it's really becoming a interesting time. Very, very interesting time. And we got the inflation report that's coming out here in Canada. That's going to be incredibly interesting data point. I don't even know when it comes out, sometime this week. But what I'm going to be looking at is how the currency reacts to that. I mean, it's already at the top of a trend, so the chances are it's going to strengthen because it's near a trend reversal anyway. But it's been in this trend for such a long time now. Eventually, it's going to break out. Do I believe it's going to break out and be stronger? No. Like, I think it's going to go weaker. And, you know, these Western countries have shot themselves in the foot with these sanctions with Russia. They are the ones causing a lot of this inflation. I mean, Russia is selling barrels of oil at $84, $82 a barrel, something like that. And I think WTI is trading like $114 a barrel. Like, that's a huge difference. So, I mean, I don't know. Like, obviously, the Ukraine war is incredibly bad, and I don't support war or anything like that. But what you have to realize is the other regimes are also, like, by supporting the Saudis, you're supporting the war in Yemen that's killing loads of thousands of civilians. It's just that the Ukraine war is being politicized. It's being used for virtue signaling. The fact is, Canada doesn't care about, well, I should be specific here. The Canadian government does not care about Ukrainians. They do not care. They are narcissists and psychopaths, and they are using this to grandstand. They are using this for their political advantage. And it doesn't matter what party is in charge. I think the same thing would be happening, because the reality is you see the same response from all these Western countries like the United States, Canada, Europe. It's all been in uniform. So don't kid yourself that somebody else who would be in charge would do something different, because they wouldn't. Ultimately, they're puppets being controlled by the elite. So I think just interesting times, guys. We'll have to obviously monitor things and see how things progress here. But, you know, that the fact that we've now got a double top in the Canadian real estate market is bearish, very, very bearish. We'll continue to monitor it as data comes out. Unfortunately, like I said, the data is absolutely terrible. Trader 586 says the virtue signaling is nauseating. Yes, no, it exactly is. I mean, I just cannot stand it. It just drives me crazy, because people think that this is having some effect, like we're helping Ukraine by doing that, by doing these sanctions. And we're really not helping Ukraine. We're shooting ourselves in the foot. And a lot of countries aren't on board with this. A lot of countries are now looking at Canada and they are saying, if Canada and the United States are going to, well, predominantly the United States, if the United States is going to do this when Russia invades Ukraine, then what are they going to do when something else happens, when we do something that the United States doesn't like? So it's incredibly interesting. And I can't remember who said this. I think it was either Doomberg or George Gammon. Doomberg's incredible. You can follow him on Twitter as well. There's a lot of good people on Twitter. That's the only reason. A lot of idiots, but a lot of good people on there. That's the only reason I'm on there. But somebody said something like, basically the United States obviously had the nuclear bombs. And after they dropped the bombs in Hiroshima and the other place in Japan, it was only after that everybody started to develop nuclear weapons. Everybody went on these nuclear weapons programs. So it was the fact that they actually did it, they actually used it. That's why people developed these things. So that is going to happen with people moving away from the dollar, but it's going to be a very, very slow process because there's so much dollar denominated debt out there. But the fact is that the US dollar won't be the reserve currency probably at some point in my lifetime, and that will have big implications as well for the US. So if you're my age and you're thinking long term, then you really got to sort of factor these things into your long term picture of if you're buying a long-term asset such as real estate, because obviously that would be massively affected. So it's going to be interesting to see what happens going forward, I think, because now a lot of countries are rattled by what's happened, and you can see what's happening with China. China is telling people to pull out of Western countries. They're telling high China officials to sell your real estate, sell everything, get out of these countries. Why? Because they've made it clear that they want to invade Taiwan. And when they do invade Taiwan, whether it's peacefully or not, the Western media will wake up and say, oh my God, we never saw this coming. We never knew this was going to happen. They are literally preparing for it right now. So the probability of it happening, it's pretty damn high. And you got to think, where do you want to be if, China is getting sanctioned by the United States of Canada? I certainly wouldn't want to be in the United States or Canada. Look on the back of everything that you buy. Where is it made? It's made in China. So China has massive leverage, and so does Russia. And the fact is, you're just seeing the Russian leverage being played, which is causing a massive inflationary crisis in energy prices, which was happening anyway due to policy mismanagement. They've just made this 10 times worse. Well, think about what happens if China, if there was sanctions against China. I mean, and the US has made it clear that they are going to stand with Taiwan. They've got naval fleet within, I think it's called the Bering Strait or whatever it is, between China and Taiwan. But anyway, that's a story for another video. Anyway, guys, thank you so much for watching. If you haven't done so, please do your part and hit the like button on this channel. It greatly helps get the videos out there. Please leave a comment below with what you think of all these events and with what you think is happening right now. It's always interesting. I read all the comments, good and bad, all the great ones, all the stupid ones as well. But it's just funny. They make me laugh. Anyway, guys, thank you so much. Hope you like the new setup with the palm here. Shows that we're serious on this channel. All right, guys, I'll see you in the next one. Take it easy. Take care of yourself.